Ted, so you do a lot of the tax side. How do tax deductions, etc., how do they fit into the cash flow?
Yeah, and it's easy. The cash flow is the solution is easy. Just extend your tax return. You don't have to pay it till the fall, right?
That's right. That's what most people do, right?
Not a good cash flow solution, but that is pretty common. But to answer your question, you know, as far as deductions, sometimes, especially now, towards the tail end of the year.
It's tax planning season,
yeah, here
right?
I'm sitting here in November, December, and I do a lot of tax planning for my clients to make sure that they have enough money in the spring, but try to save the taxes. So just as an example, let's say that they do need a new vehicle and they're looking, they figured out they want a truck, and it's like, great, trucks used to be $30,000, now they're $60,000, $70,000, $80,000, and so they're super expensive.
They're way expensive.
Many clients don't necessarily have $80,000 of cash they want to spend because it will bring their bank balance too low, right?
So then they have to get a loan, which...
Right, and so it's like, great, you can buy a truck, and for tax purposes, I can choose either to expense the whole thing now, or I can depreciate it or kind of expense that over time for tax purposes. So a lot of my clients say, hey, I'm going to expense this all now because I want the tax savings now.
Yeah, I've got a big tax bill coming up, so I got to get a truck.
So that's great.
Something,
it's
or
like,
equipment,
okay,
or whatever it is. Yep.
Exactly. So I was like, cool, I'm going to take the deduction, and I tell them you bought a $70,000 truck, you just saved $20,000 in tax by doing that. And they think, this is fantastic, right?
Yeah.
And I'm like, great, how much did you put down? And they say, I put $2,000 down. I'm like, okay.
Okay.
So you put $2,000 down and you bought a $70,000 truck. So you took a loan out of $68,000, right? And then they're going to pay for it over 5 years.
Plus interest.
With interest. And so the problem with that, going back to the cash flow, is they took a deduction now. That was fantastic. They saved a bunch of money now, but they've got to pay a payment for 5 years, and that payment is not deductible to them.
Yeah.
So that's the cash flow problem, is they're now spending money for 5 years and not getting a deduction for it the next 4, right?
Do you see a lot of people that will not put it on loans but just spend it? And maybe it's on credit cards or whatever, but they spend most of their cash and then they're struggling in the next year. Yeah, and it is a balance, right? Because vehicles and especially contractors or excavators that have these really expensive pieces of equipment, you can't go buy something for $2,000. I mean, their machines are $50,000, $100,000, $200,000, $300,000, and they're way expensive. And so to go and spend all of your cash on that is great. Now you don't have debt, but you have no cash, right? No cash.
And then let's say they come and all of a sudden the next January, February is slow for them, which is typical in the construction industry, and they don't have a lot of money coming in. And so now they just spend all their money. So sometimes a loan might be the best way to keep some of that cash available for immediate expenses and stuff like that. But it is something that you have to monitor. And I'm a little conservative, so for me, I don't like people to take out a ton of debt if they don't have to. So I try to tell my clients to, hey, if you can wait till you can pay cash either 100% or pay a big chunk down. I never like them to pay 2% down to buy a truck.
Buffer left over.
Right, and it is sad. Of course, again, at the end of the day, my job is to make my companies that I work with profitable. We want them to be able to pay their bills. And so a lot of times when tax time comes around, people rely on their kids, people rely on those tax credits so that they don't hopefully have to pay money.
Right.
So one of the problems, and this is probably the one thing I wanted to share more than anything else when it came to cash flow, is right now, what's coming into many people's bank accounts every month, it's the child tax credits, right? So normally, if you know, when you get to, if you have kids, you know when you file your taxes, one of your favorite things is your deductions for your kids. It's the most beneficial tax deduction. The problem is right now, they're paying some of those credits out in advance. And so people think, this is great, I'm getting cash now.
Yep.
The problem is when they go to file their taxes at the end of the year, they're not going to have some of those credits available. And so I'm concerned that when tax time comes around, there's going to be people that are going to have to pay tax that don't normally pay tax. So that's an example of a cash flow problem. They're used to having that, they're getting it in advance, they're already spending it. I tell my clients all the time, normally you're break even or you owe a little bit. So if you're getting stuff in advance, you're going to owe that much more at the end of the year.
Because you're either not going to get a refund or you're going to pay more in taxes than you thought you were.
And again, that's going to cause you to spend more than you're bringing in. It's going to cause negative cash flow, and that's going to be a problem for a lot of people, I think.
Sometimes people will say that if you spend more than you make in a business, then it's just an expensive hobby, and I think that's true.
Yeah, and I tell you right now, I have a lot of clients. They're what we call the richest poor people we know. Yeah. They make a ton of money, and it's great. It's fantastic to see them be successful in the industry or field, but they cannot control their spending.
Yep.
And so the biggest issue,
you can always spend more than you make.
You can't spend more than you make. That's just a simple fact. But it just, people get so caught up in I want this now.
Yep. And
so to me, to kind of sum up cash flow, you better be able to be diligent in saving more than you're spending, right? And that's kind of in a big picture, again, for our firm, our accounting firm, there are a couple of months in the middle of the year that sometimes we actually do spend more than we make. But if you look at our firm as a whole, we always make sure we keep more than we spend every year.
Yes,
like Jordan said,
yep.
Every year. The savings that we have grows every single year. And so if you can do that, you will not have any cash flow problems in your business.
Hey, thanks everyone for watching SumItUp. We really appreciate it. If this has helped you in any way, please like and subscribe to our channel. We would really appreciate that.
Thanks so much.